Well, thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah. The Talking Point today is not just about the kind of meteoric rise that the stock price of the company that we are talking to has had. And the company focus is Praj Industries. It's had a phenomenal run of bourses in the recent past. They came out with a very solid set of numbers for Q4. And we will talk to Mr. Shishir Joshipura about the quarter, about what are the numbers that he foresees in FY22, 23 and beyond. But it's also to talk about the things that Praj is doing, which will have a, how do I say, an impact on, or rather the things that they are doing, which are following the policies that the country seems to be moving towards. And Mr. Joshipura, thank you so much for taking the time out. I call this conversation an extension of the one that we had maybe 2.5 months back. I hope all is safe with you.
Yes. Hello, Neeraj. Everything is safe, and I wish everything is safe at your end too. Pleasure to be in conversation with you again.
Yep. Thank you so much. So can we actually first start with a bit of a micro? I mean, when your Q4 was obviously much ahead of estimates, and it's probably in line with what you've been trying to do and a culmination of some of those efforts. Can you just, I mean, there were many highlights. Can you just say what, forget the numbers, what were the highlights for you when it came to the quarter and the year?
I think very clearly last year was a very, very unusual year. When we started the year, everything was shut down and under lockdown, so there was no clue in terms of how the year will pan out. And from there, as the year progressed, we actually saw an improvement in our situation, both on the international market front as well as in the domestic market. So we and some of the work that we have been doing over the years has sort of started to bear fruit for us. We are in a position to see how the whole bioenergy space is developing, especially in India. But not only that, we also could see that some of the efforts that we made about our technology and its establishment in overseas markets, especially in advanced market of United States, Americas, where we were able to see a very good traction develop. We've been talking about zero liquid discharge as a focus area for us, and that's where we saw a lot of traction coming during the year with the IOCL entrusting us with a very prestigious job. There was movements in the CBG space where we finally broke through on the first contract awarded in India based on rice straw, and we are building that plant for HPCL. So there were several moments of positive development that we saw during the year. If you come to specifically to quarter, and of course, to top it up in kind of like an envelope on it all, was the complete change in the domestic ecosystem that was almost reshaped with government's announcement of its intention to advance the E20 program from 2030 to 2025. That gave the freeing up the feedstocks away from only sugary feedstocks to also include the starchy feedstocks. And I think those were two big developments on the ethanol side, which meant that there was a lot of in our sale, and given our leadership position, we were able to leverage that better. So, and what also the fourth quarter showed us was also that we've been talking about the fact that we have the capability to deliver a high volume target, high volume performance in one quarter, because that sort of sets the tone for the time to come. And we are very glad that we were able to do that in the fourth quarter of the year, that we are able to set high benchmark for execution, because execution capability is equally important. So that to me sums up the quarter. Of course, as we work through the year, we were continuously focused on developing technology, which is core of everything that we do. So there, we are very happy. We just seen an announcement came out yesterday about biobitumen. So that was work in progress over a period of time. That's something which is very important. We have sort of focused on developing co-products for our second generation ethanol technology so that it enhances the value for our customers. A lot of work in that space as well. So on the CPG side of proving the technology and establishing the right performance parameters. It's been a very exciting year. Started off very differently, ended very differently. And both the different, the end difference was on the positive side. So that's the good news.
Yes, indeed. And a bit later on in the interview, I'll ask you about whether this benchmark that you seem to have set yourself for Q4, is that the base benchmark, or is that something that you believe could happen sometime and could not happen sometime? But I'll come to that in a bit when I come to the numbers. First, just a broad brush view. Would it be safe to assume, Mr. Joshipura, that that Praj would be a string of pearls kind of businesses or business activities that will drive the ship ahead? Or would you reckon the central driving force will be one or two core businesses and the others will be there but kind of behind? How do you envisage Praj from where it is right now to where Praj can be 5 years out?
Fantastic question. So yes, we believe that we will be a string of pearls. We will not be a one single segment act alone. We have very thoughtfully invested into different parts of our businesses. If on an overall, so first generation technology and ethanol is here and now, right now at the bank of the E20 program in India and some of the other countries in the world as well. So that's very clearly here and now. That's our core business. That's the base of everything. We believe that there will be as we move forward on the gas side of the bioenergy, which has been on the liquid side so far. We will also be commissioning our 3 second generation plants in India starting middle of next year. So I think there is a lot of traction that will develop on even within the bioenergy space on different technologies. And then the co-products that sort of got to get developed out of them. But on the other hand, if you look at our other portfolios of business, I was mentioning about zero liquid discharge, and zero liquid discharge is something which is increasingly becoming very, very important because I think there's a growing realization around water and the disposal of wastewater and its impact on the surrounding societies. So I think it's very, very important dimension gaining traction in some important segments of the industry, especially metal, power, oil and gas, fine chemicals, food and beverages, and sectors which are now very clearly determined not to let a drop of water out of their premise. And that gives rise to zero liquid discharge theory. And we believe that that's a very, very good, because that combines, and why are we so unique about it? I mean, it's just not a water treatment or an effluent treatment system. It combines your knowledge of microbial technology, your knowledge of thermal engineering, your knowledge of water treatment, and all the 3 combined to zero liquid discharge. And that's what makes us unique, because at least I am not aware of any other water treatment company in India which has at its one of its core strength microbiology, which is what our core strength is. So we bring that to play, and the thermal engineering because of our entire background on the side of evaporation technologies that we use in different parts of our offerings. So that's another one. So that will be a very, very strong proposal. As we move forward, we are also very, very confident that the investments that we have made in our customer relationships on our chemical plants and equipment and skills business, that is something that will bear fruit, because we have worked with some of the global leaders in that part of our business. And yes, pandemic did sort of give a bit of a break to the overall business scenario in that segment. But we are very excited to see the kind of work that is unfolding in that particular space, where a lot of customers are now beginning to align themselves to there is some movement, and I'm not saying all the movement, some movement to move away from China as the only base for manufacture. That's obviously helping us. But what's the bigger help is the fact that we are able to provide an engineering cum manufacturing solution, and not just a manufacturing solution. And that is what is going to hold us in good stead. So that's also where we'll see a lot of clean tech, green tech companies are looking for companies that can translate their technology to a commercial plant on the ground. And that's where that business comes into play. So overall, I do believe there is another business that we are very keenly working on developing, that is on the revenue side of customers' budgets, not on the capital side, because all our businesses are on the capital side of customers' budgets, whereas this one is on the revenue side, where we have performance enhancer business, where we intervene through specially treated enzymes and microbial activity on our customers' processes to help them improve their yields and enhance it as they go through their operations. And so there's a captive customer base to which we can take the technology. We have already tasted some decent success, and now we are also focusing on how we can grow that in the global market. So a lot of excitement, several pearls out there, and we do hope that we are able to string them together in a good necklace.
And you would reckon that biogas, the order that you got from IOC, that gets combined within the bioenergy segment itself?
Neeraj, yes. The order is from HPCL for taking rice straw and converting that to gas. But yes, that's part of our bioenergy segment. So they said bioenergy is liquid and gas.
Got it. So, Mr. Joshipura, unless I'm wrong, as things stand, bioenergy accounts for what, 70 to 75% of your total revenue?
Roughly 65. The split is 65-35.
65-35. Do you reckon this will be maintained? Because last time that we spoke, you were very bullish for the immediate term on ethanol. You were reasonably bullish for the next 5 years on biogas, and the other pieces are developing as we speak. So, do you reckon this is the mix that you would maintain?
Our effort is to, as I was saying, our effort is to ensure that every pearl grows to its natural potential. It's not that we want to just grow one, everything. If somebody has a higher potential, well, they'll become bigger in size. But for us, the focus is one of the business that I forgot to mention when we're talking about the earlier part of different pearls is our business in the pharma segment, where we provide the high purity solutions. There also we see good traction developing, especially so there are segments within that segment as well. And we had sort of taken a call that we would very strongly focus on complex injectables segment, as it is called. And now with all the vaccine development activity that is taking place in the whole supply chain for vaccination that is getting established, the fermentation route that is likely to take a much more front seat than it was in the past compared to synthetic biology. We believe that will also provide us a good traction. So each business, it's not that every business will grow at the same rapid rate, because ecosystem for every business is at a different point on the economic curve. But I believe that our goal is to ensure that we get the maximum potential, into this every business's possible potential.
That's of course. As a CEO, I'm sure you'll do that. But I'm just thinking in terms of visibility that you have for 5 years, right? I'm not really talking about the lifetime, but 5 years. You reckon that this is the mix that could be maintained simply because of the growth that you're seeing? More or less. More or less. Okay. Can I now break down some of these businesses just to understand where you see them? A bit confused about the ethanol side, although it's the well-discovered part of your business, so to say. But just a couple of questions, if you will. One, the last time that we spoke, you had mentioned that you expect between 12 to 14,000 crores worth of orders on the ethanol machinery business for you over the course of the next maybe 4 years or thereabouts. And then I heard you say, or I read you having said somewhere that it could be 4 years, it could be 6 years as well, right? I'm just trying to understand whether you see this opportunity getting bunched up in the earlier half, or is it difficult to predict that right now?
Yeah, so Neeraj, that number came out of the fact that if India has to meet its E20 target by 2025, then we need to create 1,000 crore liter ethanol capacity in the country, which we don't have today. In addition to what we have, we need to create 1,000 crore liter capacity. Now, how will that create it? Will that create it? We also have to marry the feedstock situation to it as to what is the feedstock that is available. Already a whole host of enablers have taken place in the environment. So the ecosystem is very, very conducive. As I mentioned earlier, the feedstocks have been freed, etc., etc. So if this 1,000 crore capacity gets built, then we are looking at an opportunity of 14,000 crore of equipment being ordered out. Okay. Only then you'll be able to create this. So whosoever creates the capacity, that's the kind of capital expenditure that needs to come into the play. If we have to hit the 2025 target, this needs to get exhausted by 2024 in a manner of speaking, in terms of ordering. Considering that we almost take a year to start a plant from the day you think about it. So then we have 4-year period. Now, if for some reason and there could be multitude of reasons, capital availability, readiness of the promoters and logistics and other factors. If the 4 becomes 6, this 14,000 crore is not going to change significantly, 1,000 to 2,000, right? So maybe it will inch up depending on what the economic development is. So as the petrol consumption goes up, that will go. But there is another factor that will then come in, and as good as any time to speak about it. So one of the questions that get also thrown to me, although you have not asked it so far, is saying, so what happens once 20 is reached? Is there a future beyond E20? Right? And I think there are two dimensions to it. One, of course, is the fact that, so what happens to ethanol beyond the E20 program? So multifold answers to that. One is, so the leading economy in the world, which is actually showing the path, is Brazil, as to what kind of ratios you can reach. They have a goal to go completely fossil fuel free by 2030. So that's their plan, to be fully biofuel economy. So that's possible. So where they will reach a certain time will tell, but they are moving that direction. The technology will support that. On the other hand, if we have to go, India is also a big diesel consuming economy, right? We have diesel as a very big fuel in our overall energy mix. We are right now working on an ambitious program with the Automotive Research Association of India to create a blending program for diesel with ethanol. And we believe that we can reach at least 6 to 7% blending without compromising the performance on the existing fleet itself. Now, and of course, we meet the BS6 norms, etc., etc. So that work is going on right now with them as to how to make that happen. There is a technology involved there because ethanol, while it mixes into petrol, doesn't mix in diesel. So we have to find a binding element that sort of makes that happen. So that's the work that is going on. So even if it's 7% on diesel is equal to the 20% volume or more than that on the petrol in the economy level. So that's another dimension that will happen. We expect that as we move forward, ethanol will become the base molecule for many things to unfold. It's like a brick. Okay, what house you want to build out of it is a different cup of tea. So we can build, we can take ethanol and we can build aviation fuel from there. Okay, we can take ethanol and progress it to biochemicals. So there are different vistas that we can actually migrate into as things will unfold in future. But when we reach E20, very clear path available for till we reach. If the diesel becomes successful, then another equivalent volume gets added. So I think in terms of the runway that's visible to us is pretty long and very solid.
Got it. And Mr. Joshipura, you are, I know you are the dominant player out there, but is there competition out there or building up? Because if this opportunity is so large, if you are seeing it, others who might want to or might see business out there might also be seeing it.
Well, yes, of course, there is a big business opportunity out there. At the same time, so two dimensions. One, a lot of our future capacity, if I can use that word, in the country would be built based on starchy feedstocks. Relatively speaking, we have built a lot of capacity around sugary feedstock right now, and a lot more in the future. Disproportionate amount in future will be built around starchy feedstock. We have gone ahead out of India and competed with different players in different markets, international players, and we have won. And I'm very proud to say that every market, with the exception of United States, which we have just sort of started to make and push into, wherever we have actually started to focus and started offering, we have had a dominant share of business. We have actually been able to beat even international competition in those markets. And one of the key reasons for that is, and I thank the Indian ecosystem for that, is that on two grounds, our laws and our customers both have been very, very demanding. Our laws are very strict about the way effluent is handled. Very, very strict about the way the whole effluent treatment is handled. That's not so strict in many parts of the world. And that has made sure that we have developed technologies which are effluent friendly as well. You know, they don't generate enough effluent. If they generate, then we know how to treat that, etc., etc. So that's one dimension that has been very. The second is in India we are very focused on high efficiency of the plant. We don't want to have high operating costs, and that has meant that we have also developed capabilities to integrate and engineer plants which are very efficient from a perspective of its energy demand, which is also cost for that matter. And these two things have held us in very good deal when we went to markets outside India on the starchy grain side. Here, when we are now seeing the starch becoming a major source of raw material, we believe that when we are actually bringing technology back to India from what we've taken outside, the same technology will come to play here. So competition is welcome, but we know that we have really invested so heavily into development of technology over a period of time that it will take some time to catch up with us.
Okay. No, so my only limited question before we move on to the next segment, which is biogas, where I want to spend some time, is that this opportunity of 14,000 crores for ethanol, for diesel, and then if for petrol, sorry, And if diesel opens up, then another, whatever, between 15 to 20,000 crores, whatever it is, right? That opportunity. Would you be a dominant player, or would you have a power to choose projects that you want to do because there is almost virtually nobody else? Or do you believe it will be split kind of 50-50, wherein you are 50% because you're the dominant player and the remaining 50% share of the orders might be taken up by other players?
So let me put it like this. So first of all, I think having competition is a good thing, because that pushes us to be more innovative, and it's good for the customers also, because then technology suppliers like us will always be, and somebody like us will keep on investing and coming up with better solutions. So we will be able to solve many of their problems. So from that perspective, I think competition is a great thing. At the same time, we are not going to give up the ground that we have built very easily to anybody. We won't yield it. Because we are very strong. We believe that we have earned that place. It's not that through happenstance we got there. It's been a lot of years of hard work. We've developed relationships with our customers. We have shown performance on the ground. We have repeatedly shown performance not only in India but across the world. So it's a tough battle for competition to come and snatch part of the market share away from us, because we are planning on improving our market share. We are not planning on ceding it, right? At the same time, how the overall competitive forces develop, how does the business models develop, how do our own capability develop? Our focus is to do better. Time will tell how it actually works out.
Okay, so just one small number. Is this 13-14,000 crore number, whatever the number is actually eventually, PRAJ'S share of the total orders that will come in, or is it the overall share and PRAJ will get some out of it? Just trying to get that clarity.
So this is the overall market opportunity that will unfold, and we are looking, current market share is of the order 2/3 for us. So that's what we expect.
Okay, fair. Okay, so that is one. Now, last interaction that we did, Mr. Joshipura, you mentioned that it will take an entire show to explain the biogas opportunity. Right?
Yes.
Can you just, we may not do the entire show on that, but, or maybe we can do sometime later in the future, but can you kind of in some detail tell us about the biogas opportunity? Because the number was intriguing. Last time you told me that number is 1,75,000 crores, and that's humongous.
Yes. Neeraj, the government of India has made a policy decision that for the country, in our energy mix of our country, today the percentage of gas or share of gas as a fuel is very low. And they have a policy decision taken that they would like to increase the share of gas. Now that stems from multiple dimensions. It's competitive, it's greener compared to other fossil fuels, etc., etc. So that's the one overall umbrella dimension on the ecosystem that is available. One of the ways in which we can, and very clearly we are not, nature has not been very kind to us to give us some large reserves of gas. We have some, but they are not enough. So the choice is then to import, but then that's not the idea. The idea is there technology that can play a role in making us even more Atmanirbhar? We don't have to really be worried about going to other countries and importing it. So that's the whole idea. So then there's security questions, energy security, independence, etc., foreign exchange. All the dimensions come into play. So government launched a very, very, I would say, ambitious program, first of kind in the world, where they said that we want to set up 5,000 plants in the country, which will generate biogas of the specifications which are even better, are stricter than CNG. So we are actually having the CBG specifications are much more stricter than CNG specification. So it's more efficient, it's cleaner, etc. And how do we do that? What has God given us in abundance is we are an agrarian economy. Our farmers actually torch the residue that stands on the field once they have taken the crop out, when they've harvested the crop, right? So rather than just torching it, if technology can be brought to bear and convert that to spending resource, so rather than a waste, it becomes a resource. And I think that's the focus. And when you start to ask those questions, then you say, oh, but I also have this another organic resource, and I have another organic. So we found, for example, that sugar mills have a waste resource called press mud, which they have no use of, right? But it's very potent feedstock for generating biogas. Okay, so there is whole agrarian economy, the straws in the field, the grasses and the straws. On the other hand, there is pressed mud from from the sugar mills. All the distilleries have spent wash, and that spent wash can be converted into very useful form by through technological intervention to gas, to biogas. So that's another resource. These three put together will meet 90% of this target of the gas plant that government has put up. There are other organic waste, food and fruit and canteen and those kind of things, but they are small in size. The gaushalas and chicken farms and things like that, they also contribute a little part to it. So there is a abundance of feedstock which currently has no other use, right? It's a waste today, and you're converting that into a resource. So that's the big argument, that a complete waste, zero value, you're converting it into a resource of a very high value that has multiple benefits. Also, the CBG plants, the way the technology is and the logistics are and the ecosystem is, you have to develop it's not one big central plants. Then you create one big central plant where the whole CBG for the country is produced. It's not like that. It is very distributed production, because you need to depend on input supplies from the nearby fields. You don't want to transport those long distances because the cost goes up, the CO2 footprint is not friendly, etc., etc. So these are local plants which will generate enough energy to meet localized needs. But then the government came up with a very progressive policy to say, okay, you can also inject this into city gas grids, which are under development right. So if you can put this gas into the grid, then it also reaches the cities. So a lot of these farms and villages and farmers community which is surrounding big cities, if you take say a 50-kilometer radius of sorts, and that's a pretty large number, they can become the feeders of energy to this city gas system, right? We have just, as I speak with you, we are commissioning our first plant in Uttar Pradesh, and we are very integral part of the whole ecosystem development now, because of course we are also understanding what works, what doesn't. It's so fascinating to see a pump come up in Uttar Pradesh where CBG will be sold to vehicles. We are also taking the same CBG and putting it to a city gas system grid, which is just nearby. So, and also giving it to an industry which will use it directly. So, multiple uses. Here the question is, of course, the ecosystem is new, is still under development, is in nascent stage. So, as the ecosystem starts to develop, I think this is big future unfolding. And the 1,75,000 crore number came because if you put 5,000 plants, that's the capital expense you need to incur.
Okay, but how far away are we from this becoming mainstream, Mr. Joshipura? And again, if you have some thoughts around that, you would also have some thoughts around where is Praj in this ecosystem? What is the kind of, say, maybe annual flows, assuming that the policy goes ahead as planned, can come into Praj's books as well? What are the other competitors out there? Because if this is nascent, then you might be a principal player, but there might be others also who might be thriving with
yes,
such a large opportunity.
Absolutely correct, Nina. So there are companies which are offering a solution in the space. One of the things that we focused on as a company was that company, at the end of the day, any country or community or economy has a finite resource. There is nothing called an infinite resource, right? So how do I convert that finite resource to its maximum potential? That is how we designed our plans. We were not focused on saying, whatever resource you have, let me convert it to whatever is possible. No, that was not the way we approached it. We said, no, we have a finite resource. I need to get the best footprint conversion for this at the lowest possible cost, but highest conversion, so that I am able to put the feedstock to its maximum. We followed a different than most everybody else in the market space. And we are very confident. Right now, as we go to market space, our yields are at least 30% higher at the minimum compared to our competition, because of this approach that we took. And the other thing that helped us was this, as I was telling you earlier also, we have it is in our DNA to look at microbiology as part of our offering. That is not true for many other companies. Are engineering companies who are offering these solutions. So we are able to bring this insight of microbiology into the whole conversion system, because ultimately it's the microbes who convert the in feedstock into the gas. So our deep understanding of how microbes work, what do they do, in what kind of conditions they thrive, and so on, is really helping us to create a big differentiator in the marketplace. I am sure there will be other players as well. There are other markets in the world where, for example, in Europe, some countries like Germany, etc., they have seen this ecosystem develop in a very strong way, although they have all been very farm-based. Whereas we are looking at this as an industrial, automotive kind of solution. As I said, India is a unique program. Initial days yet, so for anybody to start farming out numbers, but I think what's very important is possible, technology is there, demonstration is there, we have learned what will take to build the ecosystem. So those are the ticks now. We just now to start to see how we start to multiply this, and that's where multiple agencies will have to play their role.
But you reckon this could become a larger piece for you as well, if not in FY22, but say FY23 onwards? I mean, that's a good 12 months away.
That's exactly what we're working towards, because of the simple fact that, it's very simple. At the end of the day, there must be demand for the product, right? Then everything else follows. So if there, and I'm very simple. You go to a petrol pump today, and you end up paying on an average, maybe even more in some cities now, but on average about 80-85 rupees a liter for diesel, right? And even more for petrol. In India, there's a big, and there is, I mean, it was when we started looking at markets, so we were able to see some of the smaller towns have actually converted themselves to this gas economy already.
Wow.
But whichever form they find the gas, because they find it cheaper and cleaner.
Of course.
So they have been able to do that in a very, very strong fashion. So we do believe that the ecosystem will take some time to develop. But as and when it develops, and it will develop, we have no doubt about it, it will start to play a very significant role.
The numbers say that it's going to be significant. I was just wondering if it's at least 24 months out for it to become significant for you. And again, I don't think it's a question of the demand. I'm sure I, as a consumer, would want it. It's just whether the government will be able to set it up in its entirety as planned or no.
Yeah. And the government is not setting it up. It is the private entrepreneurs. There are, good that you asked the question. So who are the guys who are setting this up? So sugar mills are natural owners for these plants. There are lots of entrepreneurs who want to set up these plants, those who have understanding of the agrarian economy in one form or other, people who run granaries, people who run supply chains for biomass, and so on. There is a whole from ESG funds, ESG focused funds, and the green funds, because this is per ton of CO2 reduction probably among the cheapest technologies today in the world. So in order to reduce the CO2 footprint, if you're looking, and there are lots of multinationals that are looking at this as a sure shot of, everybody needs energy, right, to run their operations. So it's a very basic need. So is there a way for me to be green and clean and find a way? Well, there's some very interesting leads that we're working on right now. As they start to fructify, you hear about them, but very interesting perspective coming from very different angles. So the whole industry structure is no longer one industry dependent, one feedstock dependent. It is now sort of opening out both on the ethanol front as well as on the gas, so liquid and gas both, to an industry structure which is a pan-geographic, which is inviting very different set of customers, which will have a very different set of drivers for itself. So I think we are in for some very, very interesting times.
Yeah, no. So what I actually meant by the government, and one more just small question here, was that I thought that another Satat program, the government was trying to in some way take the lead in trying to have this set up. Am I mistaken?
Yeah, no, you're absolutely correct in the sense that yes, the whole ecosystem has policy is a very important dimension of the overall ecosystem, right? So they are doing everything they can right now to create. So the whole program under which the oil marketing companies are contracting for 15 years of take from the producer. There's a price that is notified. There are schemes that are being launched by state governments now to invite tenders to set up these plants in different districts of theirs. In Punjab, for example, very aggressive plan from Punjab government to set up in each district at a 50-kilometer radius. They want to set up one plant. So already those tenders are out. So and the ESG companies are looking at it. So it's not only the government which will put up the plant. We don't expect that to happen. What we expect to happen, definitely HPCL is doing one, but what we actually expect to happen is that over a period of time, a significant number of different kinds of players will come in. Because this is the good news on CBG front is that it is commercially viable.
Got
Don't
it.
need too much of support. So some support in the initial part because of the ecosystem, etc. But and it'll stand on its own feet and run. So that's the good news.
So effectively, the government doesn't spend a penny out of its balance sheet on either the ethanol program or the CBG program. It essentially only formulates the policy, and it's a win-win for all. And that's why on that depends its success.
On depends success. Government has to play a great enabler role, and I think they're doing that.
Yes.
But as we are also, there are some issues because there is absolutely no parallel in the world for this kind of a program. So some issues do crop up which you could not have foreseen. But I think there's a very high degree of commitment to find a solution and move forward.
So now, Mr. Joshipura, I'm putting in some numbers here, and that will probably give you an opening to tell us about the other businesses too, right? When I speak to people who invest in your company or write about your company in research reports, right? While you clocked in around 1950 crores of orders as an order intake, if I'm not wrong, in FY21, right, or thereabouts, and with the order backlog of about.
Neeraj, I lost the connection. I couldn't hear you.
Okay, what I'm trying to ask you is that while you clocked in between 1,500 to 2,000 crores of order inflow and order execution of that nature in FY21, the expectation that people have is that this order backlog, or the order intake at least, would actually maybe treble in very quick time for you. And then, of course, depends on how you execute, that would be the revenue part. Now, are these estimates off the button, or do you reckon that it could happen in very quick time, that the order intake could double and possibly treble in very quick time annually? And how?
So let us look at this. Yes. So there are two dimensions to this. Okay. One is that, and I don't want to set up a benchmark which was artificially low, if I use this word, because last year the first quarter was really a no-go quarter, right, in a manner. So we actually, what you see is actually a work of 9 months. You don't see the work of 12 months, in a manner of speaking. So it's an unfair recommendation or a pattern my shoulder to say, what this. But overall, this is just a 9 months. So I wouldn't compare to that period of time. But what's happening is the program is accelerating. The feedstocks are getting liberalized. We are seeing a definitive sign of industry structure change. And what do I mean by structure change? Earlier, if you look at 2 years ago, it was one industry, sugar, which was putting ethanol based on one feedstock, molasses C, in 3 states of India. That was the market. With the opening up of the feedstocks, it is now sugar industry, but with 3 feedstocks in 3 states. But with the starchy feedstocks, is every state of India that can put up. You need not have any background on sugar anymore, because starchy feedstocks is equally good. And it is a CO2. So then, and the start, generally speaking, and a very clear visibility on the consumption. That's the most important part in terms of its demand. That means we will also see the size of the plants go up. People will take a little larger bet. We are also seeing very different set of people walk in. For example, people who have been solar plant developers, they now want to put up this thing. People who have been developing windmill farms, they want to put up a plant on ethanol, because very clearly this is a very definitive commodity and very sure shot as compared to wind, which is still dependent on which way the wind blows or whatever, the availability, and they have their own space in the economy. I'm trying that up at all. We are also looking at people saying this is a very, very clear way of reducing the carbon footprint. I think that's so. Some of the people are attracted because of. And I'm now talking mix between the liquid and the gas and different feedstocks. So we are seeing very different set of customers also. So geographically open, feedstock wise open, customer characteristics wise, customer segment wise open. So I think it's very different dynamics at play. And if you look at this multiplier with these dynamics, as I said, the runway is long and clear.
Right.
At what speed the whole ecosystem moves, is it? We have, as I already said, we have no intention of giving away an inch of our market share. So we are focusing on doing that, but also bringing newer solutions to our customers, so they are able to win in their market. Unless they win, we are not going to win. And we are doing everything to help them win right now.
Yeah, but so I'm still not getting the answer. I'm just trying to understand the string of other businesses plus the ecosystem moving at a pace that you believe it can move. And let's not be unrealistic here. You reckon the kind of order inflow numbers that we're talking about are a possibility in quick time, or is it something that is slightly far out?
They should change. They should change. They should
Change
change.
they will,
They
Mr.
will
Joshipura.
change.
Change they will.
Change
I'm trying to figure
very
out the
constructive
pace.
fashion. Yeah. So as I said, if this plant happens in is this plan ever to happen in 4 years time frame? Sure, what you're saying will all come true.
Got it. No, but the other business is contributing to the overall order intake, Mr. Joshipura. That was I was wondering.
Other businesses also. Yes. So I think the bioenergy business is moving at an extremely fast pace right now. So for other businesses, the ecosystem is not changed in that sense. So for us to get that kind of business, we'll take a different level of effort, which is what we are doing right now. So we are this question often gets popped internally to us also, saying, so will the mix change between bioenergy and the engineering segment? Okay, that's the question that gets asked. But we are pushing multiple levers to see that business also grows, because there also we are not sitting at some very high market share. So the headroom to grow is very high in those other businesses, unlike in bioenergy in India, where our market share is high. So because the headroom is available, we will use different levers to grow those businesses. But the idea is to actually grow. Yes.
Got it. Now, I did hear you in one interview say that, and probably with me as well, you mentioned that for now, at least, you don't foresee the need to do any kind of major CAPEX to be able to, ratchet up this run rate of growth that you're talking about. So from 1,000 crores, if you move to hypothetically, double your revenues or something, you won't need to do CAPEX. Until what levels do you reckon you will not need to do any major CAPEX? And will the future CAPEX as well be light in nature, or at some point of time you reckon you will need to incur some heavy CAPEX?
So, Neeraj, the good news is that, as I was mentioning to you earlier, that the last year's fourth quarter actually showed us what we are capable of in a quarter. It was a good test of our hypothesis that, yes, we have infrastructure that can deliver. So if you just multiply that by 4, the number is still goes to more than double our size. So we can do that. That's one part. Second, the business model that we are adopting is also such that for us, the bigger investment is the technology investment and not capacity investment, if I can use that word. Capability investment is much more important for us than capacity investment in our business. It is possible for us to manage the manufacturing part of our equipment, etc., in a much more streamlined fashion. We are doing a lot of work there as well, because we decided that rather than just keep on doing more of same, can we look at some very advanced technologies on welding, on improving the footprint movement through the shop floors, rearranging our shop floors, automating some of our operations. That itself will free up a lot of capacities for us. We are also looking at some very focused vendor development, dedicated vendor development, who will only work with us, etc., etc. So that's another step that we are taking. So we believe that those steps are enough on the capacity side. But in capability terms, we will continue to invest more and more into our R&D and technology, because we clearly see a new era in the development. If 4.0, Industry 4.0 is about automation and AI and things like that, I think there's a 5.0 in the making, where a complete transformation will take place on the energy side of the equation, because energy is a very, very important tool for the industry. And we believe that the role of sustainable bioenergy will be very, very high compared to where it is today. So we see a complete transformation taking place in 5.0.
Okay. So suffice to say, Mr. Joshipura, that large capital expenditure is not something that you foresee, not now, not in the near future.
We don't see that in the near future. No.
Not in the near future. And just a quick follow-up. You mentioned so many times in this interaction and otherwise as well, that you see yourself as a technology company predominantly, and then a capital goods player, so to say, if you will. Is the talent pool availability and the costing an issue at all, or is this are these both factors been easy thus far?
We are blessed in a country where talent is available aplenty. I think we to tap them, we are able to excite them, because many companies in this world can offer the kind of work excitement that we can offer, the whole challenge and the opportunity that that is unfolding in front of people. So I think we are able to manage that front very, very well. We are also very strongly focused on developing a pipeline of leadership, of different leadership, on the technology side, on the management side, all dimensions of business. Because we believe it's not about our people or our team. We need to have a flow of people that over a period of time will be able to take upper mental and go forward. And that's how we are focusing upon this. A classic case in this I can share with you is what we are trying to achieve for the second generation ethanol business of ours in Europe, for example. It's a very different market space, very different feedstocks. Right now, there's a big focus coming in on forestry-based feedstock, forest residues. We recognize that development, and we have tied up with a leading local company there in Sweden. And now we have the wherewithal to actually take the technology to a certain level and add into the technology and make it even further strong. And take that new technology to the market along with them, of course. So we also believe that as we go forward, we don't have to do it. We can also collaborate very intelligently, whereas 1 + 1 makes 11.
Sure.
Right.
Sure,
so this is one example that I gave you for the company in Sweden. There's similar thing on the biogas. There's similar thing on yeast and enzymes. Even in future as we unfold. So I think what we are focusing on is saying there are different levers that one could use to enhance one's capabilities.
Sure.
And we will put them to play and use. That's the right.
Okay. Last couple of questions, Mr. Joshipura. Before I ask you about the PRAJ Matrix Lab, which somebody referred to as the big moat for your company, do you want to just very quickly talk about the other businesses? Because thus far we've in detail discussed ethanol and biogas, but you mentioned that the other businesses are also exciting. Maybe just throw some light on the how do I simply put it, the annual maintenance business, if you will, right, which you referred to, which is not a capital setting up business, but more. So if you just want to briefly speak about the others.
So yeah, sure. So let us start. So on the performance enhancer business, as I was talking to you about, it is a business in which we, because of our knowledge of enzymes and microbiology, we provide certain additives to our customers that enables them to manage the inhibitors in the process much better, and therefore improve their yields and reduce their wastage. Okay, that's the broad way to put it. It could go to, and this is knowledge that extends beyond ethanol. It can go into sugar companies. So we also have performance enhancers for sugar, for example. It can help improve the color of the sugar. It can help improve the yield of the sugar, reduce the impurities, etc., etc. So these are the interventions which are within the process, and these are consumables. So what we provide becomes a consumable. It's not a. So these are different treatments of bacterial treatments. So we believe that with our of our customers across the world, all of them are potential. All of them need this. They're trying to find one way or other of meeting this demand today. There are competing products out there. At the same time, we believe that we do bring in some kind of uniqueness to the overall process, because maybe our competition does half and another competition does half, and both of them put together, customer take the risk. We will combine both and sell them this one single product, etc. So different ways, the application engineering focus that we bring to this whole offering is very different compared to anybody else. So there is no company which will do this and capital technology. So combining the knowledge that we have in the organization and then offering it seamlessly to customer is what our offering is. For example, we are also finding customers telling us, would you bring in operation and maintenance practices to come to unfold? They don't want to manage the complexities of operation. And they say, okay, will you do it for us? So that's another vista that can open up for us, because we understand how our plants work, and therefore, obviously, we are best fitted to operate. And I'm not talking of 1G because that's very standard, but I'm talking even beyond that, the new generation ethanol, CBG, etc. And one big role that technology will play there is we believe that digitalization will have a huge role to play. The whole remote performance monitoring aspect, integration of different. So there is this microbiology in chemical engineering and process plant engineering, but there's also this whole IT field, and we can combine the both And I strongly believe that the interaction of the two different fields always lead to innovation. So we are very happy to be in that space right now, and that's where we're focusing.
Okay. Praj Matrix Lab. Very quick thoughts here. Somebody said that that's the true moat for Praj and not anything else.
I do believe that it's a strong moat for us. There is no question. And as it goes with any R&D setup or investment that you made over a period of time, I always tell this story to even my new incoming employees. I said, guys, do you know when R&D, of course, R&D has been in our blood for many years. But Praj Matrix was set up in year 2008-9. And if you could recollect, 2008-9 was the time when the world was melting because of the financial problem that arises, right? But here was a company which was, and we were not some big gorilla out there. We were a focused, nimble, short, small company that decided that, no, this is where we'll invest our future, in our future. We went ahead with that investment. We committed ourselves to a program, and we have stayed with this since then. And I have absolutely no. So today, somebody wants to say, okay, you know what? I want to compete with Praj. Well, I will tell them, please go back to 2008 and start all over again. And please put those 13 years of hard work combined with the previous knowledge that we had, and then maybe you'll come around to be at us. There is no company like us in the world which is doing both of these things together, and that's what makes us unique. There are technology companies who develop technologies very focused only to ethanol, only biogas, only water treatment, and so on. But we are cutting across by looking at it from a very different perspective of fermentation. For example, fermentation we believe is an area that will increasingly play a larger role in our life. And you in normal life don't think like this, but we strongly believe that fermentation will have an increasing role to play, whether it's on the energy side of our life, which we already see in form of all the discussion that we had so far. Even in the drug making, the whole biopharma thing and the vaccination field developing is a lot of fermentation involved there as well.
Mr. Joshipura, as people that I speak to say that the real moat of Praj could well be the Praj Matrix Lab. Can you briefly speak about what is it that you're doing there which could help business going ahead as well?
So Neeraj, as you rightly said, we do believe that Praj Matrix is a big moat for Praj. Just to give a bit of background, the technology development has always been in our DNA. That is how the company was founded. That is how it has progressed over a period of time. But in 2008-9, when the world was melting, that's the time we actually set up Praj Matrix. And I think that goes to show a lot about the passion and the commitment to the cause that the company's founders had, because they believed strongly in the cause that they were serving, and there's a much longer term vision to the whole aspect. And Praj Matrix is actually a vision on the ground, displayed on the ground as I see it. This is a center that obviously has helped us develop all our technological prowess, what we are so far, and of course the people that have been working with them, and not only inside the center itself, but even the outside, bringing the markets, the feedback, the customers, the whole system, the whole ecosystem. And there was nothing like this in India, at least, definitely not in many parts of the world. So I think it became a unique place, which also attracted some very good talent then, because it was a place where they could actually give shape to their dreams and their capabilities and their potential. So it was confluence of many forces, but it does represent what we have focused on developing so far, and will continue to develop in time to come. This is what has actually made us stand apart from being just another equipment supplier to a company which is very differently positioned in terms of the whole process from technology onwards right up to the O&M. We are able to find solutions to our customers' problem. I think that's the biggest part, that we don't go and offer a solution that's already with us, but we actually find a problem that customers want to solve and then use this infrastructure in a very, very big way to actually solve that problem. And I think this kind of whole ethos and the ecosystem, the passion and the commitment, that's not easy to copy.
I wish that continues. Mr. Joshipura, I have one final question, and that is some estimates that brokerages put out, right? I don't want a guidance from you. I'm just trying to understand if these numbers are out of whack, or do you reckon that they're not completely insane, or not insane really, but just off whack completely. So For example, I think, so I'm reading out as things come in from a note, so that it's not something that we have estimated, because we frankly don't know how to. But from a 1,300 crore revenue number, one brokerage estimates you to touch maybe 2,600 crores to 3,000 crores in 2 years itself. Profits moving up almost 3x from 80 crores to 240, 250 crores in by FY23. I mean, is this a factor of a base effect that you also mentioned, that in FY21 you effectively operated for only 9 months, and therefore all of this could be possible?
Our effort is actually to move, so they are not completely insane, let me put it like that. So they're not complete. So, and as we were discussing earlier also, the time cycle is the issue here, in terms of at what form and time how the whole business moves. If you combine all the discussion that we had so far, I think we should be in a position to build strongly on this base that we have acquired for ourselves at the end of this year. And I say that because we have an order book which is almost 70% higher than what we had at the beginning of the last year. So that should send something. In my now we have had every quarter we were added, in spite of the record fourth quarter, we still added to our overall order book. So it means our order booking speed is still ahead of the speed of our execution. So that's a good sign. That's what will help us to build as we move forward. And we are very confident that, as I was telling you, that we clearly see a long runway ahead of us. And that's a good sign.
All the best, Mr. Joshipura, and thank you for taking the time out and explaining in detail what Praj is doing. You guys are up to something pretty interesting, and I hope it fructifies not just for you, but it will be great for the country as well. So thank you so much for that.
Thank you, Neeraj.
And viewers, thanks for tuning into this edition of The Talking Point.